Hello, it's Rhonda Thomas, and we're about to do Chapter Five's intro exercises. Chapter 5 is accounting for merchandising business. Okay, so let me go ahead and share my screen and get into Chapter 5 in the book. I'm also going to show a couple pages from the ebook. I am in the ebook right now. Okay, now that we've progressed to Chapter 5, we are going to have products in our business instead of just being a service. The first thing I want to show you, and I have a handout for you today, the chart of accounts has some new accounts that I want to make sure that you are aware of. So we have a new asset called inventory. We have another new asset called estimated returns inventory. Be sure to notice that our account numbers are now triple numbers, right? So ones are still assets, but the second one that you see there can also mean something like current assets or long-term assets such as property, plant, and equipment. So just be sure to know that sometimes those second numbers also mean something like the first numbers do when you have account numbers. All right, so let's look at the rest here. We've got two new liabilities: customer refunds payable. If we have product, we can expect to have returns from time to time, and when customers return, they'll want a refund. There could be some coupons involved with selling something. That's usually a marketing campaign of some kind. So that's a liability. Okay. Our new revenue account is now called sales instead of fees earned. We have a new account called cost of goods sold. That is considered an expense, but it is also mainly thought of as a cost. This is what the items cost that we are going to sell. Then we have another expense called delivery expense, and I will explain that. But I just wanted you to see we have 1, 2, 3, 4, 5, 6, 7 new accounts on our chart of accounts. Okay. The next thing I want to show you is this really good table of buyer and seller entries. We have to figure out which side of the transaction that we are on. Are we the buyer in the transaction, or are we the seller? Okay, so let me get to this here. The buyer transactions and journal entries are a little bit more simple than the seller. So sometimes the seller transactions are a little more complicated because we have refunds and so forth. But I wanted to show you a very good chart that shows, here it is, the dual nature of, I think this is it. Yeah, here it is, the dual nature of inventory transactions for the seller and the buyer. So from this point on in Chapter 5, we're going to ask ourselves if we're the buyer or the seller. So we've got to be able to know which hat we have on in order to prepare for the transaction journal entries that we'll need to be able to do. So what's nice about this Exhibit 10, which I made you a copy, is every transaction you see, here's the seller side, here's the buyer side, which is fantastic because, boy, I could have used this when I was learning a lot of this. So I want you to keep this handy while we work on Chapter 5 problems, because I think it does a very good job showing both sides of the transaction. Okay. And like I said, we have to establish which side we're on. The other thing we want to make sure you understand is the difference in the income statement. So I have provided an adjusted trial balance. Okay, adjusted trial balance. Remember, adjusted trial balance is step 7 in our accounting cycle. And if you'll look at the adjusted trial balance, you can see the the new assets that are sitting here: inventory, estimated returns inventory. We have our new customer refunds payable, estimated coupons payable, liabilities. We have our new sales account, our new cost of goods sold account, and our delivery expense account, and any other that I might have missed. Okay, so I want to show you that this adjusted trial balance, what it would turn into to a new income statement. All right, so here is the income statement, and let me see, I'm hoping this is net. Yes, this is Net Solutions. Just wanted to make sure. Net Solutions, we're with the same company as we look at this. So Net Solutions, here is what the new multi-step income statement looks like. Please note, it is still for a period of time, just like before, but it's much more expanded than what we've done in the past because we have product. Okay, product makes all accounting more complicated and needs to be more detailed. Okay, so look, notice at the top, just like we did fees earned, we have sales. Okay, we have sales. And then immediately following sales is the account cost of goods sold. That must be subtracted to get a subtotal called gross profit. All right, so if you want to write next to gross profit, you might write subtotal there. This is not an account. It's a subtotal, right? Just like total selling expenses is a subtotal. Total administrative expenses are a subtotal, right? But still, the income statement is going to get us down to the bottom line, right? Whether we have net income or a net loss for a period of time. But here's how it's going to work. And I'm going to put this into a spreadsheet here. So let me call up the spreadsheet. I want you to get used to writing this formula. Okay, so just a second. Let me make my Excel sheet a little bit bigger. I remember when I was learning this, and I practiced writing this as much as I could. So now that we have product, I want you to memorize and learn sales minus cost of goods sold, which is also known as COGS. So if you ever see that, that is what that means, okay? Then we get something called gross profit. Okay, I'll go back and fix that name here. We get gross profit, and we want cost of goods sold here. I don't want to put a minus sign. I'm going to put the word less. Okay, less. It thinks I'm trying to put a formula in here. So I'm going to put less cost of goods sold, and then we want a line there. All right. Then we have gross profit, and then we're going to have operating expenses. We break up operating expenses into two main categories. Okay, two main categories: selling and admin, and in that order. And then in each of these categories, we use that ascending order, right? Miscellaneous always last, no matter what the amount is, right? Remember, accountants like order, and they like to be able to know which expense is the most by just glancing at this statement, right? And it's not unusual to see salaries be your number one largest expense. Okay, it's just very typical. So I want you then to memorize less selling expenses. Okay, and then you're going to get, I mean, there's some in between here, but this is the order they're going to go. Then we'll do less administrative expenses, and you'll learn the vocabulary involved with what a lot of these account titles are. Okay, administrative expenses. Okay, and then you're going to get an operating income. Okay, an operating income. If you ended up having more expenses than you had sales and gross profit, then you would have an operating loss, but this is what we're trying to get to, an operating income. And then you're going to have other. Okay, now there's other revenue and expenses that don't fit into selling and admin. These tend to be more the company as a whole as opposed to what we're in business to do. Okay, so for example, Net Solutions is a business with computers, right? Computer business, but being a landlord really isn't part of the operations of that business, so they've separated that out. Okay, so I just want you to then know next we put plus or minus, it just depends on what it is, plus or minus other revenue and expenses, just depends on what you have. And then finally, you get your net income. Okay, now there is a little in between, but for the most part, this is a good category. Ooh, this is a good calculation to understand and get in your mind, all right, as we go through this. All right, so I'm just using the word less instead of a negative so I don't have any problems with Excel thinking I'm trying to put in a formula. All right, net income is where we're at. So please think about that as we're going through chapter 5. All right, here's what that single step income statement looks like, right? This is a lot more tidy, more concise, but it doesn't tell you near as much. Does not tell you near as much. Yes, it does have the same net income. So to a person inside the company, this would mean more sometimes, depends on who it is. To outsiders, this actually might be more accommodating for them to read. So the statement of stockholders' equity does not change. We still add net income to retained earnings and subtract dividends and keep track of common stock just like we did before. So the statement of stockholders' equity hasn't really changed, and the balance sheet hasn't really changed. There might be the extra assets, the extra liabilities, but for the most part, a balance sheet must balance. Total assets must equal total liabilities and stockholders' equity, just like we did before we had product. So the one that has changed the most is this multi-step income statement. And don't worry, we're going to do plenty of these. All right. So let me see if I can work on a few of these problems. If I don't get through all of these, then please come back and look for another video. All right, so I'm going to go to chapter 5's beginning exercises, which is in the chapter 5. We call them intro exercises. Okay, so we're going to preview this as a student. A lot of these are algorithm problems, so you're going to get different numbers. So please be sure to follow along so that you can replicate what we're doing and with your numbers. All right. So first thing we're going to look at is what is that gross profit? Hey, we've already talked about that a little bit. Okay, so let me move this over here to the side, and I'm going to line up my spreadsheet. There we are. I think this will work. I didn't have all of my notes on my intro problems. I've got it for my coursework, so I'm a little bit behind the 8 ball, but we'll get there. All right, so number one is figuring out gross profit. Let me refresh this so I can get it lined up better. Be right back. Okay, so here we have it. During the year, so this will help us with the first one. So this is, we've got 7 problems to do. So let's go ahead and put number 1. Okay, and and I'll put a color to that so we know what problem we're on. All right, so we're looking at gross profit. So during the year, merchandise sold, okay, merchandise sold is 182,900 in cash and 557,400 on account. So remember, you can have 2 kinds of customers: the cash customer, on account customer. On account customer is that accounts receivable. So now let's ask ourselves, are we a buyer or a seller in this problem, right? So if it says merchandise is sold, cost of goods sold, then that means we are a seller. Okay, let's go ahead and put seller in. I did that here. Okay, I'm just trying to see. I can't remember. All right, I used blue and purple. All right, so I'm going to use blue for a purple for seller. Let's go ahead and put that in. Purple. All right, we are the seller. So what we want to do is we have an Excel spreadsheet here during the current year. So let's go ahead and open this up. We may not have to do a whole lot here on my spreadsheet. All right, so we're going to figure out gross profit. So what is gross profit? It is sales less cost of goods sold equals gross profit. But once again, we've got 2 different kinds of sales here, right? So we have cash sales. I have cash sales of 182,900. And then I have credit sales. They're both sales. One we've just received the cash for, the other we haven't. We're waiting for it to come in. All right, and so this now becomes total sales. So let's add these 2 together. And I get 740,300 if I've got my calculations correct here. So give that a try. Okay, so we're going to put this on here and then we'll create the formula for it. And then we're going to subtract the cost of goods sold. So cost of goods sold, and I'm going to put this